I don't know. You can deposit $10,000 to the ATM.
I mean, you
No,
could
no,
just you just throw it in.
I don't know. I've never done it. I don't think I had $10,000 to go deposit in. Hey guys, welcome back to our Bay Area Home Hustle podcast. I'm your host, Parm Rahi.
I'm Mike.
Partner Mike with us, and we
I'm
got a
Chi Mak.
special guest, Chi Mak from ALLWIN Capital. Today, we're going to talk about mortgages. We're going to get into mortgage loans and talk about the state of where we are today, right?
Yes.
We're also going to talk about options for buyers, first-time home buyers, and how to prepare for a mortgage. So
Okay, good.
let's get into it.
Yeah.
Let's do this before, okay? You know, as a buyer out there,
Mhm.
even before you guys look at homes, get pre-qualified. We talked
Yeah.
about this last time,
Yeah.
okay? That's why we're doing this podcast today.
No, 100%. But before we get into that, let's talk about our special guest. Let's talk. Why did you get into loans?
Yeah. I was as a engineer in the tech field before. After I left the tech company, and then I tried to say, change my career to somewhere else. And then I noticed one area they need a lot of math.
Yeah.
So okay, I'm good in math. Why don't join into the loan area? And then I try to do my surveys in the loan.
Absolutely. I mean, loans. I
Yeah.
mean, it's a very complex process as well, too. Right? You're playing with numbers all the time, just like engineer would do.
Yeah.
You're both in tech fields before.
Yeah, absolutely. So I understand that for sure. So where are you now, Chi? You're with the.
Well, right now I'm with ALLWIN Capital. Actually, since I moved out from the tech field, I already joined ALLWIN. I have been there, for over 20 years.
Wow.
So I did see all the process, from all the way up and then down at the 2008.
Yeah.
And then again, the lowest interest rate until now, there's a big jump hike in the interest rate. I have been, went through all those, cycle.
You went a full cycle. But yeah, I mean, it's been turbulent time, especially since 2008.
Yeah.
It's been really interesting to see where we went as an industry, right?
Yeah.
Now we're at 7% rates again,
Yeah.
which is even weird. But we have a new president today, so let's see what happens and how he loosens policies and how it will affect housing. But we'll see. Anyway, so let's get into it. Let's nitty into this whole thing. So let's talk about if I'm a first-time home buyer,
Yes.
right?
Yes.
And I'm looking to get a loan,
Okay.
and I don't know nothing about real estate
Okay.
or how the process works itself, right?
Yeah.
But I heard bits and pieces. I need to get a certain amount of down payment. What advice would you recommend? And I put up some main little topics here: conventional loan and FHA loan.
Well, we can go through. Yeah.
Assume I heard conventional and FHA loan, right?
Yeah.
What? How do I start?
Well, for me, no matter conventional or the government-sponsored, FHA, those loans are based on, how much down payment you can prepare.
Right.
Like, for example, if you only have a 10% or 20% down payment, of course, you will go for conventional. If you only have around 3.5% or 5% down payment, then go for the FHA. Yeah, but my suggestion is don't just look at what program you are going to. Yeah. The key thing is before you're looking for home, you have to find out, check in with me or some other financial advisor. Yeah, find out how much you can afford a loan. You know? Right. And then before you can go out to visit the site to look for houses, for example, based on the current rate around 6, for a 30-year fix, based around 6.875. And then if you can only qualify for a $500,000 house,
right,
then of course you could look at that area. But if you can qualify for 1.5 million, this is another story. So you go for different area.
Right.
And that part, and then you can get your broker or you can get your realtor, step in to help you to look for the houses. But before that, you should focus on try to find someone help you out, find out how much you can buy.
Yeah, it's definitely a guided process. I mean, just like realtors, just like we help you guys buy a home or sell a home, right? It's the same thing with a loan officer. They have to kind of guide you through the whole process itself, right?
Yeah.
So let's just go back for a second. So with a conventional loan, right? You mentioned 10 or 20%, right? And this is true. Obviously, if you put down less than 20%, you have to also carry a PMI, right?
Yeah. Yes.
Essentially,
we need to explain the acronyms.
Yeah. Okay. This is my job. It's not the like the best way is you get 20% down payment.
Yeah.
This is pure conventional. and then there will be no, mortgage insurance.
That's what PMI is.
Yeah,
private
PM,
mortgage insurance.
yeah. But if you have less than that, we can still help you out to do the loan with only 10% or 15% down payment. Then you carry a insurance, or you can do two loans. One is equity loan plus one of the, the base 80% of the loan, two loans together, and then try to avoid the insurance. But no matter how to play around it, it is, we can help you out. We have the expertise to help you out.
Yeah.
So again, you have to go back, look at, number one, you find someone to help you like me. And then I will ask you, number one thing is, are you self-employed or you are salary-based, based on W-2? So if it is a W-2, maybe simpler, just give me the last 2 years W-2.
Yeah.
And then the last 2 years of, the income information.
Yep.
And then
So
that will be,
Yep.
But if you are self-employed, it means that we're also looking at the last 2 years.
Right.
Based on your
taxes
tax
and all.
return, and then also deduction. Because say if you tell me that you're making 1 million per year, but you tax deduct 800,000 or 850,000, it means that you only make around 100,000. It's not 1 million. So you have to make, so that is a very simple math. The bank or the lender, they're looking at the actual income you have.
Right.
It's not looking at your gross income.
Right. No, 100%. Yeah. No, I get that. What were you gonna say?
No, I was going to say, what about stated income? We hear a lot about this. Is it back?
No. Just
I don't think it ever went away, by the way, right? State income never went away. It's
this is another way, because some lender try to help some people if they don't have a stable income, so they call stated income.
Yeah.
But the bank still look at something. They will look at how much you save. Say, for example, if your profession is a realtor, you only have one transaction per year, but that transaction make you earn more than $1 million.
Right.
Okay, so you don't have to do the rest 11 months.
Got it.
But the bank is not looking at how much you make. They will look at how much you have end up in your saving accounts or stock account.
Right.
They will based on how much money you have and then grant you the loan.
Oh, so they look at your assets instead of just see your commission as agents, right? Okay.
Yeah.
Yeah, I mean, the idea is to look at the whole.
Right. The whole picture, pretty
whole
much.
picture,
So instead of like a monthly.
Right,
Yeah,
but also then if I were a employee, I'll have to show you my pay stubs, right?
Yeah, pay stub. Yeah, at least 2.5 months to 3 months pay stubs.
Right.
And then if you do have a lot of overtime or a tips, from a restaurant, so they will look at your year-end pay stub.
Okay.
Because normally in your W-2, they won't show you the overtime income, the bonus income, or the tips income.
Right.
Yeah.
They have to look at your year-to-date.
Right.
So that's why they will ask you in 2 years. Let's for example, now it's 2025. They will look at 23, 24, last paycheck of each year.
No, that's true.
Yeah.
So, okay, so conventional loans. We talk about the PMI, which is good. I think that's good information now. Talk about FHA really quick, and I know, and we can talk about FHA loans from our perspective. How when we accept offers or when we even submit offers for our buyers.
What does FHA really mean? We always, I mean, this is a disease for agents, right? We always use acronyms, but the people out there may not know. What's FHA?
Federal Housing Authority.
Yeah.
Right.
Federal Housing.
But it is a kind of program sponsored by a government body.
Yeah.
But the point is, pretty much when they try to qualify your loan, same as a conventional loan, no much differences. The only differences, is you don't have to save up to 10%. You can save up to 3.5 to 5% down payment. Then you can start your loan process.
Right.
But of course, again, something similar to conventional.
Yeah.
If it is less than 20%, they will ask you to buy, the mortgage insurance.
Yeah. 100%.
And then, but they give you two options. One option is one time. When you deal with the loan, you pay ahead of time, and then you pay, around 3% fees to cover your mortgage insurance. The other one is, you can based on each mortgage, monthly mortgage to pay the insurance over there.
Right.
But no matter what, personally, my recommendation is if you can get some kind of gift money, the help from your family members, you
To
know,
offset the FHA amount. Okay.
yes, rather than you have to pay extra fees or extra mortgage insurance every month.
Yeah, that's true.
You know,
Taking that on,
yeah,
especially for
and then
first-time
right
homebuyer.
now you know that, let's say for example, your brother, your father can give you a gift, 19,000 per year, no tax at all.
Right.
Nobody asks what kind of question they ask. You know, whether your money coming from, they don't ask. They just, you know, if you can get, say for example, you can get 19,000 from your mom, 19,000 from your father, and then if you're buying the house with your wife, it means that you can get 4 checks from your parents.
Ah, okay.
So you know, add up together, pretty much is already covered the other 5%.
Yeah.
If you save up 5%, you have another 5% as a gift from your family members. Then try to avoid.
So sometimes going FHA may cost more than just getting all the
Yes.
others, right?
And
Even
then-
though it's tempting at 3.5%.
And then on top, it depends on the condition. You know, if it is a buyer's market, FHA won't work. Why? Because FHA take
not
longer
competitive.
time to process.
Right.
One of the,
Yeah, because the lender,
That's a good point.
after the lender, say Wells Fargo or
Yeah.
our company, approved your loan, finish everything, you still have to move to the FHA department to the second review.
Yeah.
So it will take another 5 business days to 10 business days.
That's a good point, and that's also on the real on the transaction side of it.
Yeah.
Yes.
If you have a conventional loan, 20% or more, sometimes it's not all the time, maybe more even. You know, you can skip away from the appraisal. With the FHA, the appraisals are very strict too, right?
Yeah.
You have to have, like, for instance, your appraisal when he comes into it, go look at the property. There's certain things that have to be on, right, and working condition.
Yeah.
Right.
So you can't have holes in the walls.
Yeah.
Right.
Things are falling apart. It has to be like move-in condition. Your stove has to
Yeah.
be working.
Uh-huh.
All those things have to be in play in order for FHA to
Yeah.
approve that, because they'll call it out. Appraiser will call all that out.
Yeah,
Also,
but
sorry.
Parm make a good point. You know, that's why you need the professional, you know, experience to help you to search for a property. You know, they can help you find out and make sure this is a loan qualified house,
100%.
rather than like Parm just mentioned. Oh, there's a hole there. The toilet is not working. The light is not on.
We're always talking about
Yeah.
bad toilets.
Yeah.
It can't have any of that, right?
Yeah.
It has to be livable, movable.
Yeah. Living condition.
Ready,
Yeah.
living condition. Right?
Yeah.
It can't have any safety issues
Yeah.
in there. Because FHA will call it out. It's a safety issue. They won't insure the loan.
Yeah.
And here's another thing I want to add with in the seller's market on the MLS, the listing agent is going to put cash or conventional loan
Yeah.
only,
Yeah.
no FHA, because they want to sell the property quick because it's a seller's market.
Yeah.
Yeah.
So my recommendation, based on the input from me and from, you know, my friends over here, I recommend you, you know, number one, get in touch with me first. I try to help you out based on your condition, like start on how to save up your money, how to make correction of your credit report, make sure everything is ready before you step into the market.
Yep.
Right. Segue from that. Let's talk about these two topics. I put it up here, but I really want to talk about it. So let's talk about CTD, which is credit to debt ratio, right? Let's talk about that really quick. And
well, they're very simple, you know, like if your debt ratio is high, so your credit score is low.
Right.
And then for the bank, at least they are looking for a minimum of 720 of the credit score to give you a certain rate.
Yeah.
But if you have a 780 or 800, of course, you know, your rate will be better.
Right.
Yeah. But if you below 720, say you fall into 700, fall into 680, you still can get a loan, but the fees or the rate will be high.
A bit higher, right.
So it's the more difficult for you to, you know, qualify for a loan. Because if your rate is higher, right now it's already close to 7%. If they ask you to pay 7.5%, it means more difficult for you to qualify a loan.
Absolutely.
So my recommendation, again, if you do have that kind of issues, I can help you to run a credit report.
Right.
I can help you to make, you know, some correction on your credit report.
What is a healthy rate on a credit? Because credit to debt ratio is also credit utilization rate too, right? What is it, 30% or less?
Yeah, it should be.
So like if you have a credit, so in other words, so just our viewers can know,
Yeah.
if you have, like, let's say you have two cards, right?
Yeah.
You have one card, you have $10,000 limit and you charged up $3,000 on it. And you have another card with $5,000 limit and you charged up $2,000 on it. So your total debt for credit, you got $5,000 charged up, and total credit outstanding is $15,000, and that's how you determine, right? You take the usage
because
divided by the total debt, and you get your rate.
in the normal, common sense, if you're less than 50%, they don't deduct your credit.
Okay.
But Parm make a very solid point: is if you have closed something over 30%, but you remember when they send you the statement, say today, the 20th, of the month,
Right.
they send you the statement, but you don't have to make the payment until the first week of next month.
Right.
Right.
So there's some kind of grace period.
Right.
But it doesn't mean that, okay, you got the statement and then you stop spending. You got the statement, you still go to Starbucks, you still go to gas station, and then you make your expenses.
Yeah,
Right.
So,
Right.
so once the grace period plus your current expenses, it means you're over a certain percentage,
Yeah.
the credit bureau will start deducting your credits.
Wow.
Right.
So-
which ultimately affects.
So
Affects
the safety choice is, like Parm mentioned, keep it below 30%.
Yeah.
So
That's a rule of thumb, really. That's what I learned.
yeah,
a long
but
time ago.
but a lot of people they
No,
don't
understand.
they don't care, or
They don't
look at
know
that.
about
They
that.
don't know
So
about
you can't max out your credit card.
Yeah.
You want to get a loan.
Yeah,
That's
yeah,
not
yeah.
done anymore.
Yeah. So
Well,
my other recommendation is, if you have a number of installment loan, like your car loan,
Yeah.
or your college loan, you better try to reduce it,
Yeah.
because every $500 payment
Yeah.
can eat up $100,000 of the borrowing power.
I want you to repeat that for our audience.
Yeah,
Yeah.
okay.
You repeat that again, please.
Or again, if you have some kind of debt, like for example, you have a credit card debt of $500,
Yeah.
or you have like a car loan of $500,
Yeah.
it means that suppose you can buy a $500,000 house, but because of the car loan, so you can only buy a $400,000.
That's crazy, isn't it?
Right. That is
So-
crazy.
So make sure, that's why I always recommend, don't go for luxury car, don't go
Yeah.
for new car right now. Maybe
Yeah.
you just get $2,000 out, buy a second-hand car as
Yeah.
far as moving.
Right.
Then you save up your money, make your credit report clean and look beautiful.
Yeah.
Get the loan. Once you buy the house, get the loan, then you can use your money to get a beautiful car.
We did a short on lowering your debt.
Yeah.
Go check it out.
Yeah, absolutely. End of the day, when you're purchasing a home, right?
Yeah.
I mean, you're in the market to buy a home for your family because you're expanding or whatever. Maybe you're tired of paying rent. The last thing you want to do is trade off one with another, right? I mean, a vehicle is going to only go so far. End of the day, remember, cars and all these things are going to depreciate unless you're buying some sort of other luxury diamond or something that's going to depreciate over time, which they don't even exist these days either, right? I heard there's a lot of man-made diamonds.
Yeah.
Lab.
Cubic
My-
zirconia.
My point is that property values appreciate,
Mhm.
right? And you should always buy property, especially if you're trying to build like generational wealth for your kids and so forth. I mean, that's the way to go. So yeah, keeping your debt lower is the way to go. especially
Mhm.
when it
Yeah.
comes loan. Let's talk about this one too. Debt to income.
Yeah. Right now, all the lender or all the bank, they're looking at your gross income, not
Right.
looking at your net
Total
income.
income.
Yeah, total income. So based on your gross income, the bar is 43%.
Right.
So it means that if you make $1,000, you can have a $430 to cover your mortgage,
Yeah.
your property tax, and then your insurance.
Your housing
Right.
expense.
Right.
Yeah.
Your
Those
housing
are expenses, know. So make sure that you are below that one. And then again, that's why I can help you out. I can do the calculation for
Yeah.
you, and then make sure you qualify, P-qualify, what we call P-qualify, before you can go out to the market.
Right.
Yeah.
And debt to income is what is it, like a 50-50, right? Is it 50-50 when it comes to loans? Like you can have up to 50% or no? Is it like you gotta keep it under 46%?
Well, depends on the market.
Right,
When it's tight. So because I have to keep you have a choices on conventional or FHA.
Yeah.
So 43% is the safe bet.
Okay.
Yeah, okay, 43%.
Yeah.
Because I've seen some lenders pushing it
Yeah,
to
they-
50-50.
Some of them
do
they
it
can
50-50.
they do it, But again, this is only part of the qualification criteria.
Right.
But the other major criteria is, is your appraisal.
Mm.
If you're going to say have a lot of down payment,
Yeah.
if you buy a home of $1 million, but your loan is only $500,000,
Right.
okay, then maybe your income level they can push you up to 50,
Right.
49 point
Okay,
something.
got it.
Right,
You know,
right, right.
but if your house is say 1 million, you try to borrow over 950,000.
Right.
Yeah, so they
You know,
want to lower. They want to
right.
lower,
They
yeah.
want to see the lower
Right.
income ratio.
The key is, no matter which bank,
Yeah.
high street bank or online lender, they are looking at the risk,
Right.
Right.
how much risk they carry.
Right.
So it's all depend on that.
Right. No, I understand. I get it. Okay, so it makes sense.
Right. Of course. Yeah.
What else? What's let's talk about what are some of the mistakes you've seen like buyers make? Like one mistake in your 20 plus 30 plus years. You've been doing it for 20 some years right now.
Yes.
Right? What is like one mistake you see in buyers?
That's most common.
Yeah.
like,
Yeah, the
over
most
and
common
over
mistake.
again, like something you can share.
One thing that very common is a lot of my clients, not a small number, big number, they will based on, say again, 2 months ago they ran a credit report. The credit report lasts for 3 months.
Yeah.
So we went out, try to help them get a house, get the loan approved, everything ready.
Okay.
Then they are too excited. They start buying something else. For example, they went for vacation, buy a timeshare.
Oh my God.
And then what happened? Because suddenly you jack up your credit to debt ratio.
Yes.
Yeah.
And then your number one, your credit score dropped.
Yeah.
I do see a client have a 740 before when he bought something from Home Depot,
Yeah.
and then dropped to 680. And then also, suppose it's already 43%. After she bought something, then the ratio went up over 51%.
Right. Which
So
makes
it means
difficult
that-
for homeowners. Yeah.
Wow.
From the qualified, from the approved to not approving.
Yeah.
Every bank, when they fund you, let's say for friends of you got all the documentation ready, you got the title company documents signed,
Yeah.
everything ready to go.
You-
They are ready to give you the key.
Yeah.
Then before the funding, they run the credit report again.
Right. They actually do it twice
Yes.
just
Yeah,
before
yeah.
you actually sign it.
That's very good. That's
Yeah.
a very good point, actually. You're right.
So
about
a
that.
lot of my clients, especially the first time buyer, the
Yeah.
young clients,
They make mistakes.
They go buy furniture first before
Yeah.
they actually get the key.
yes. So that's why I did remind them, don't do any installment loan, don't buy anything.
Until we record and
Yeah,
done.
yeah. But
Yeah.
sometimes they're overexcited.
And
Oh
then they get floored,
Yeah.
man.
yeah.
You know what, it is like you said before too, if you don't have someone on your right side, right, and this is why a lot of realtors can't see that, right, especially when it comes to first-time home buyers, right,
Yeah.
First,
There's
okay,
a lot
so
of- there's a lot
first-time
of-
home buyers are very emotional.
right,
And
there's a
it's
lot of-
our job
Yeah.
really to
Yeah.
kind of say, you know what, I know you're excited, but we still got to have a clear head.
so there's a lot of hand holding, what I'm trying to say.
No,
It's like
of
you
course,
have to,
yeah.
they don't know.
I know,
they don't know that.
but
They
I
don't know
keep
the
on.
process.
Maybe sometimes my client think that I'm talking too much, but I have to keep on reminding them, hey,
This is
everything purchase or you. Oh, the other common mistake they make is not really making a big purchase. They apply another credit card.
Oh yeah, that's a big
That's a common one.
You
can't
know-
apply new credit.
Yes, once you apply for another credit card, then it means that you're adding another line of
Yep.
debt.
Yeah.
Yeah.
Yep.
So a lot of people, they don't know. By the way, I also like to mention something I didn't mention before. If you only have one credit card,
Yeah.
or if you don't use credit card again, it's difficult for you to get a loan
Right.
Yes.
because
yes.
you don't have enough trade line.
Yes.
So if you did have a car loan before, and then it can count a trade line. If you did have a college loan or still have a college loan, is another trade line.
Yeah.
So normally the bank, they are looking at 4 trade lines.
Okay.
So
Wow.
you have if you have 2 trade lines already, you can use 2 credit cards.
Yeah.
And then if you can only have one trade line or no trade line, like I do have a clients, they are newly from the other countries to this country.
Yeah.
So they are totally empty from the
They don't have
history.
any credit whatsoever.
Yeah, so I will recommend them try to get at least 4 credit cards.
Got it.
you
Yeah,
know.
and use it a little bit at a time. Pay
Yeah.
it off. Just
And
keep
then
it, active.
remember earlier, Parm mentioned they're about the 30%.
Yeah.
So each card just using a little bit. So I recommend my clients, if you have 4 credit cards,
Yeah.
one purely for the gas,
Yeah.
one purely for say grocery,
Grocery.
you know, yeah, and then one is for your other expenses, entertainment, movie.
Yeah.
Every card try to use a little bit to
Yeah.
build the history and then build the trade lines.
No, that's true.
Yeah.
That's very important. I think that's a segue into another next topic, which is it's very important. I think to have that. Let's talk about a little bit something else. And I know mortgage rates have been
Yes.
really crazy, and all of last year, even for us. I mean, it's been a. I mean, I hate to.
Okay, let me interrupt. The pandemic. Remember?
Yes.
What was the rate?
Well,
During the worst of the pandemic, the height of the pandemic.
Well, the rate was at that time was 2 point something.
Yeah. See.
Yeah, I mean,
Right now it's a 7 or 6 something.
6 something, right? So
Yeah.
where do you?
So it's a 4% higher.
What are you expecting? I mean, I don't
This
know
year.
what this new administration
Yeah.
is going to do. We'll see what happens. I mean, but what are you expecting in terms of rates? Where is it heading? What do you think it settles this year? And what's your forecast for this year?
Well, one thing, if you look at the numbers, last year even the Fed already reduced 1% of the rate for the
Federal
rate.
funds rate.
Yeah,
Let's be clear. Federal
But-
funds rate is different
yeah,
than mortgage rate.
yeah.
Talk about that.
we'll
Mortgage
talk about
rate
that
is based on 10 years bond,
Yeah.
Okay.
10 months.
but 10-year bond is higher than before.
Yes.
Absolutely.
Yes.
Why a lot of time right now, you can say that globally, a lot of other countries like China, like England, like Germany, they are not doing good.
Yeah.
So their stock market is either going down south or flat.
Mm.
So a lot of investors, they want to make money. They put their money over in our New York Stock Exchange.
Especially in bonds.
Yeah.
Yeah.
Bonds
And
are giving
bonds,
you a higher
yeah.
return.
Yeah.
And then again, when you have a higher demand, it means that you push up
Mhm.
the rate higher.
Right.
Absolutely.
So our mortgage loan is based on 10-year bonds.
Yep.
So our 10-year bond level goes down. So that's
Mm.
why even though the federal reduced the rate, but our 10-year bond is still high.
Right.
Right.
So how I foresee coming year? Well, if I have the crystal ball, I make a lot of money. But you know what I see is if you really need a house, so you have to go for it. Because like you're getting married or you got a newborn, you need a house, you need an apartment, you need a condo.
Right.
It
Just-
comes down to needs.
Yeah.
Everybody has different needs.
Yeah,
And it
but-
comes down to that.
Again, one thing, buy a house first based on the current rate,
Yes.
but try not to pay too much points to buy down the rate, because I can see no matter 1 or 2 years or 3 years later, the rate will drop down. At that time, you can refinance again. Say, for example, you get a 6.5 right now. In 2 years' time, maybe go down to 5. Then refinance again.
No,
Okay.
100%.
No,
And-
really.
and-
Yeah.
and-
That's the trick.
Yeah.
Oh, you're absolutely right. And the other thing to remember too is that, we as a country have a lot of debt,
Yeah.
right? Which we pay interest payments on every month,
Yes.
right?
Right.
And that's being held by other entities and other countries
Right.
and so forth.
Right.
How long are we going to continue to pay those high debt payments as
That's
well,
right.
too, right? I mean, so the government's going to look at that too, right? I mean,
Yeah.
at some point, if they see this inflation being controlled, which good numbers was last week, well, at least the core inflation was good.
Right.
Overall inflation numbers didn't change much, but the core inflation, which is housing and energy, that came down. And if that continues to go down, which is what the Fed's going to look at.
Right.
I mean, they said 2 rate cuts for this year, but maybe it could be more. We don't know, right?
Well,
that's sort of-
again, based on last year experience, even
Right.
though they have 4 cuts for the
Right.
rates,
But no difference.
no
really.
differences.
Yep.
So even though they say 2 or 3 times in the coming year,
yeah,
but don't expect too much. Mainly is try to look at how our 10-year bond
Well,
moving.
how does
The
it
market,
react
the
to
bond
interest
market.
rates, right?
Okay.
I mean, so it comes down to investment and stuff,
Yeah.
right?
Right.
So this is where new policies will take
Yeah.
effect, and,
Right.
and let's see what they are look like.
Yeah.
And he's promising a lot of stuff these days,
Mhm.
so I don't know. We'll-
Yeah, again,
we'll find out.
if you have a lead, just go for it.
Yeah.
If you wait, maybe once the rate coming down, the market's very hot again,
Yeah.
and then you have a multiple offers. It means that it's more difficult for you to get a house. But if the market is not that hot right now,
Yeah.
and then you can afford a loan of 7% or 6.5%, then go for it. Buy a house right now. You have
Yeah.
more choices.
I agree. It's actually from last year to this year, home prices are going to, well, in the Bay Area,
Yeah.
are going to go plus
Yeah.
12 to 14%
Yeah.
They've
increase.
already gone up.
So I mean, if you don't get in the game, if you can get in the game, I suggest because everybody has different needs, just as Parm said.
Yeah.
And if you can afford it, just
I mean,
get your foot in.
yeah, even like the prices went down. Truly, the prices went down. Last year.
Yeah.
Last year, beginning of this end of 2023, beginning of 2024. That's when the prices really started going up.
Right.
And since then, they've gone up.
Gone back up
4
already.
to 6%
Yeah.
in very different counties and stuff.
Yeah.
Right? And now, I mean, what I've been looking at, even different realtors and stuff, it seems like the foot traffic has increased.
Mm-hmm.
People are buying it, but you have to also remember there's a lot of money in the Bay Area too.
Yeah.
People are putting in a lot of larger down payments.
Yeah.
Too. That's another thing. How a lot of the loans are going through right now is like they're going like 30-40%.
Right.
Yeah.
These loans, right?
Yeah, that's
People
what we're
afford
seeing.
a little bit at a higher rate, and they can
Mhm.
refinance later on. But that doesn't mean like every single person that's holding on to their mortgage at 2% or under 3% is willing to put it on the market.
Yeah.
Right? They're not.
Right.
There's not a lot of inventory coming on the market still.
Yeah.
Right.
So let's segue into. I want to ask two other things.
Mhm.
First of all, I know the refinance business is probably dead right now, right?
Yes.
That's not happening.
unless
And why is that?
I want to refinance when we can.
Well,
because
if-
the rates
yeah.
are high, right?
It's true. If my loan is around 2.5 or 3%,
Why mess with it?
Yeah, unless I have something like
Of
I
course.
did have a client.
Yeah.
They refinance because their son's going to medical school.
Special
They
needs.
need
Yeah.
they need
They need
$400,000 for the school
I
fees,
got you.
and then that's why they need refinance.
Right.
Special
Even though
needs.
they have
Right.
very low rates, but
Right.
they still have to refinance
Right.
for higher rates.
Right.
But that's not happening. That's not common right now.
Yeah, it's not
Those are-
common. Totally
those
not
are special
common.
sort of needs, right? If
Yeah.
somebody needs money in dire situation,
Yeah.
like, okay, I have equity, I
Yeah.
can refinance, I can
Yeah.
go from here, my payment will increase,
Yeah.
which is fine, right? But what other, but you're not seeing anything else in terms of like just a general refinance. Okay, I have this rate, I'm going to go down and get another rate. That's not happening.
No,
anymore, right?
not right now.
Okay.
Yes.
But that segues into, the other options are obviously
Mhm.
home equity line of credit, right?
Yes.
You can get that.
Mhm.
Those rates are high, but
Very high, 7 point something.
Wow.
7.5
they
to
were
8.
10% not long
I
ago.
know.
Yeah.
But still.
Yeah.
10%.
Yeah.
10%. Actually, I think might be on a
Oh my God.
Okay, yeah.
Yeah, they're pretty high, but they
Yeah.
have come down. They're like
Yeah.
7.5 right
Mhm.
now, which is even a better thing. What the next question? Unless you want to add something.
No,
else to
so
that.
far I'm good.
Okay.
I'm learning a lot.
Yeah, thank you.
I know, me too, man.
Yeah.
Where do you foresee, like, what do you see? Obviously we keep saying this, the inventory is going to shrink more, which seems to be the case. It's still very tight, right? So if we have where do you see rates going from here? I understand you mentioned the 10 years, but what do you see in terms of numbers? We're at 6.8 today. What do you foresee for the next 12 months?
Well, what I
Again, I
can
know it's
see
late.
that we will slowly going down.
Right.
They cannot keep too high, especially under the new administration in DC.
He's going to push for it.
Yeah, they try to say regenerate the whole market. Cannot keep the rate so high, because the rate so high not just affecting the mortgage industry, but also affecting a lot of how you run the company, how you run the factory.
Right.
So if they want to put something back to the normal according to what they said, then they have to push the banks, to push the federal, cut the rates lower. So what I can see, hopefully, next year, or the coming year, the rate at least going down at least 0.5%.
But again,
or
that's,
to
I don't
1%.
know how much you can push that, right?
Yeah,
Yeah.
as a market driven.
Yeah.
Right.
So it depends on market, but of course, what I see the government, they try to push it down.
Really? Yeah. Let's see.
Yeah,
I don't
unless there's some very very major thing happen affecting the whole country.
Oh.
Which will obviously.
Yeah.
Yeah. But I don't think so. The employment is still strong in the Bay Area.
Yeah.
Right. There's
Even with layoffs, it's still
even,
strong.
Even like I was reading the other day that like number of companies that are popping in San Francisco
Yes.
now, they're all AI driven.
Yeah.
Yeah.
Very much so.
Yeah.
And the I was saying something like 128,000 square feet of office space is being occupied or already been occupied by AI companies.
Yeah.
So I mean, there's money around and there's a lot of money being invested, right?
Yeah.
And that's another reason prices are not coming down here.
Okay.
Affordability is really, it's unaffordable, honestly.
Well, they're going to be. I read somewhere that builders are going to build more, but they're going to be. They're going to build smaller homes, though.
Yeah. Right.
You know, so instead of like the mansions that they can't sell because it's over 1.5 mil, they'll try to build smaller, not just condos, but you know, starter homes. Starter homes. So it's affordable, and they're, you know, we have another generation of college grads, right? Yeah. The Gen Zs are coming out. They're going to be finding jobs. They're going to get tech jobs, obviously, right? So they're going to be over 150K, 175K. Yeah. With two incomes, they can afford it, right?
Yes, yes, all right.
Let me ask you another question, Chi. And this is, maybe you heard it, maybe not. I mean, we're talking about, I'm going to just jump into like cryptocurrency. Like,
oh my God, you and your crypto.
I just want to know, okay. I mean, look at crypto right now.
Yes.
It's $100,000 or more,
it's
right?
It's crazy.
Yeah.
Pretty crazy. We got a new president. I wouldn't be surprised if it's like.
Well, he has a meme coin now.
Yeah.
$sign Trump.
And his coin's pretty much up there. Yeah. But again, I don't want to divest. I don't want to go into politics here.
Yeah.
But I just want to talk about crypto, right? As Bitcoin increases in value, right? That's the liquidity that has to come out, right?
Yeah.
And people have that. People have options. Okay, I'm going to sell my Bitcoin, transfer it, and so forth. How does that affect into mortgages? I mean, if I had, I don't know, 20 Bitcoins or something, I want to buy a home. I sell 10
That's a lot of money.
Let's say I sell 10 of them or something, right?
But for the bank point of view, no matter what you own, stocks, another house in other state, or you have a cryptos, you know, a Bitcoin, you know, that doesn't matter. Yeah. They look at you. That's why this is another thing that we can add on. Yeah. Other than your income statement, other than your W-2, you have to submit your bank statement. The bank, they are looking at your saving on cash in your saving account, your CD account, something like that.
So even though you asset then, or they look at it as a cash, or do they have to convert it for me to like say,
to cash? Yeah.
The other means of assets, they will pre-qualify you based on the other means. Say for example, you have 1,000 shares of Tesla. Yeah. Of course, they will based on that Tesla assets say, okay, but the point is, when you have to submit a true underwriting.
Okay.
You have to submit all your documents. You have to sell your stock, sell your Bitcoin into cash.
Oh, so you do have to sell.
Yeah, but you have to keep all the transactions.
Of course.
You have to keep the transactions. The money is moving from your Tesla account.
So trail. You have to have a trail.
Into your checking account.
Right.
And then, if you make the transaction earlier, so then you don't have to provide the trail. Once you have over 3 months, you say you sold your Tesla 3 months ago, then you don't have to provide the trail.
Oh,
but if you sell say right now you're going to the title company. Yeah. If you sold your Tesla last week, then you have to provide all the checking.
Okay.
Okay. Well, that's a very interesting.
Yeah, I didn't know too.
Yeah, they need to look at your cash.
Okay.
So I didn't know that you actually had to convert it. I mean, I knew, but I was just.
So just showing you that, or showing to the lender that I have 1,000 Tesla shares ain't gonna fly unless it's converted to cash for sure.
Oh, the other thing I just based on those kind of different scenario, I just remind you, because I did have a client, he need another $10,000.
Okay.
To make the down payment to up to 20%.
Okay.
But then he went back to his home country. Okay. He bought a case of cash. Coming in, when he arrived in the airport in the evening, and then he put the ATM, the cash through the ATM. And then the bank doesn't allow that kind of transaction, even though you have cash into his own account.
Right. So the lender's not going to look at that, basically.
Yeah.
They will
so they call off the.
So it was more than $10,000, right? Because you need to declare if it's over $10,000.
Well, again, if you carry the case of cash until tomorrow,
no trail again.
Yes, until tomorrow morning, you go down to the bank counter, put the case of money into the the bank teller.
Yeah, the teller.
Yeah, and then they will ask you different questions where the money coming from.
Yeah, of course.
Then you have to make a statement. Yeah. Then everything counts. but not through ATM.
Oh, okay. So don't go through the ATM.
Right. I don't know. You can deposit $10,000 to the ATM.
I mean, you just throw it in.
I don't know. I've never done it. I don't think I had $10,000 to go deposit into ATM.
No, I mean it makes sense because you do need to. I mean, sometimes the ATM doesn't, register, right?
Yeah.
So I would just go to the teller.
But wouldn't that be a problem still, even if you went to the teller and deposited $10,000 cash you brought from a
But
country?
you just declare that, say,
I borrowed it from my family.
or don't say borrow.
Huh?
Oh, I mean, I got it as a gift from my family.
Yes.
Okay.
Again, the bank, they are looking at when they go for the underwriter, they are afraid that when you apply the loan, you have another loan, sub loan or under table loan.
Oh, right.
Don't say you borrow money from your family member.
It has to be a gift.
You make a big mistake.
Okay. So borrow, you cannot borrow.
No.
I can get a gift. Okay, so a gift can be right away.
Well, the gift, it can be from my grandma.
Right, but can we use it right away?
Yes. If it's just a gift, you can use it.
Oh, okay.
It doesn't like a gift letter or something,
yes.
right?
Okay, so
and
the gift letter can be right away.
I can help you to do the gift letter.
Okay.
And then I can help you to file in all the tax, the IRS form.
Okay.
My question was, so that answered my question. That's easy. So if it was a gift letter, you declare that and you can deposit it, and that could be used as
it doesn't have to stay for several over time.
Well, again, if you have the trail, like for example, you sold Tesla, you sold your crypto, and then there's a kind of phase where the money. Okay, you carry some money from say from Mexico, from China.
Yeah.
Then you just say that I withdraw the money over. You keep the receipt and then I carry it over.
Right. Maybe especially if you move on from a different country or something, you had accounts there.
You can close your account in Mexico and then bring the money over.
Yeah. Then as far as you can provide the track record,
right?
Then it's okay. But again, don't go for the ATM and then don't say I borrow money from my home or from my wife's father. Don't say that. It's a gift.
Okay, got it. All right, always use the word gift.
Oh my God. Well, that's all. What else?
No, this is good, man.
Anything else to add?
Yeah. Well, again, make sure if you have questions, contact us.
Yeah.
Contact Parm.
ALLWIN Capital. Chi Mak with ALLWIN Capital.
Yeah,
guys.
and always work. You gotta work with someone who knows the numbers, who knows the game, who's been here for a while, right? I mean, and there's a lot of qualified agents out there, and even loan officers out there. We're not saying
we're not pushing anything.
We're not pushing propaganda here, but I'm just saying,
But what we're pushing is always ask your lender, your realtor, because they're here to help you guys.
Absolutely, especially for first-time home buyers. Yeah. Well, that's all I have. Thank you very much, Chi.
You're welcome.
Thank you, Chi.
Appreciate you coming down, and that's all the episode for today. See you guys next week.